back again for what might be the last part. So doing all the pro forma statements. So we are asked to do the pro forma income statement for January and February, and we're also going to total up the 2 months as well. So when you're getting into, so most of the stuff in here we've already figured out, or we already have the info to figure it out. So sales in January is your sales in units during that month times the selling price. So if I go up and bow all the way back to our cash receipt schedule, I've got my sales forecast in dollars for January is 550,000. So I grab that, and then I can also drag it across for February, and I can total up those two for my sum. There. Okay. Cost of goods sold is your units sold in the month multiplied by the cost. All right, so again, scrolling up, we've got our sales forecast in units January 2,200. I mean, you could pull it up from up here. It doesn't really matter. So I'll multiply that by our cost per unit, which is down here. And we get our cost of goods sold. And I can drag that across and again, grab the total. And I'll make sure, I'll just keep this bar down so I can work through my number formats as we go. Okay. Now an underline, because we are doing a subtotal here, we're doing gross profit. So gross profit is sales minus cost of goods sold. Okay, 220,000. I can drag that all the way across. That's just a calculation. Okay. Next, we've already dealt with selling and admin, and we said that that's 10% of sales and that it's paid for in the same month that it's incurred. So there's no timing adjustment thing that we need to deal with. As related to what we dealt with in our cash payments. So I can just go up, cash payments, selling and admin, 55,000, and then drag that across for February. Wages, just like selling and admin, there's no timing difference between cash and when they incur the expense. So I'll pull that straight from here as well and drag that across. And it's the same again for rent. So I'll go grab the rent. There we go. And pull that across. And then I can do my totals all the way down as well. Although that did not work because I pulled down the wrong thing. Need to go across here. All right. So next thing is we saw depreciation in there. We said this is not relevant to cash payments, but it is relevant when we're talking about our income statement. So if we go into paragraph 4, it says depreciation expense will be $2,500 per month. All right, so depreciation $2,500. Same the next month. So our total is the 5,000. And I'll get my number formats. Beautiful there. Okay. So as you look through, there's nothing else in there that matters to our income statement. So we just calculate our EBIT. So our EBIT is our gross profit minus all these things. So I can even clean this up a little bit. I'll have that as my subtotal. I could do another line called total operating expenses. And then just do a total of all my operating expenses across here. And then my EBIT becomes gross profit minus total operating expenses. And that just cleans it up a little bit so I don't have like a equals this minus the sum of these and all that kind of stuff. It just makes life a little bit easier. So I'll put a underline on that because there's a total after that. Okay, so EBIT is done. All the way across, which is great. Next, we have to deal with our long-term loan interest. So long-term loan interest, we've already determined based on our paragraph 5, so it's an $80,000 loan, no principal payments, which doesn't matter in an income statement anyways. Monthly interest payments are the same every month. So we're not worried about a timing adjustment because it's not changing as the months go on. So I can just go up and grab our long-term loan interest from our cash payments, which is $400 a month. So I'll do that and hit my sum and grab that across too. All right, $800. Next, short-term loan interest. So this one is where people like to get confused. So short-term loan interest is paid in the month after. So we have to pull the interest for the month that it's incurred. Okay, so in January, so if we look at our cash, so this is our, there was no loan taken out until the end of January. So there was no interest until February. So we can just pull this straight across as 0 here and 82 in the next month. So because if you take the loan out at the very end of the month, there's no interest incurring until the next month when it's outstanding the entire time. So we're all good there. Just the 82 looks good. And then we get our EBIT. So our EBIT is our EBIT minus loan interest for the long term minus short-term loan interest, and we get 68,100, and I can drag that across. Okay. Lastly, income taxes. So we already incorporated our tax installments, so the actual payments for the tax, but our tax expense is based on the rate and the earned income in that month. So if we look at our paragraph, let's see, paragraph 4, the last sentence, the firm's tax rate is 25%. So I'm going to park at 25% over here and do my calculation. So this times our tax rate, make an absolute reference there, fix it, and then pull that across. So you can pull it all the way across. This 58,405 should be the same as these two, which I can see down here is true. So you can pull it across, or you can just sum those up. It'll get to the same answer. And then lastly, our EAT is our EBT minus our taxes. Taxes. And I'll pull that across here, and I'll change my number format so it looks how I like it. Okay. Okay. So looks like we're on track. I'm just going to do the statement of retained earnings now because that's nice and quick, and we'll do the balance sheet in the last installment. So our opening retained earnings comes from our opening balance sheet, which is the one given in paragraph 8. So we're told retained earnings at December 31, 2019 or 2018 was 108,000. So I'm going to pull that in. Then we got to pull our EAT that we've earned in those 2 months. So I've got to pull my EAT from there. So not just January or not just February, but the entire period that we care about. Pull that. Then dividends. We already took into account dividends in our cash payments, so we can go up and find those. So dividends was here, just the 40,000 one time. And then our closing retained earnings is the total of that. All right. And let me get my number format. Perfect. Okay. So there we go. That's our closing retained earnings. We'll be back in a second with our balance sheet.